Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com. This is Trading Places Live. It is Tuesday, June 6th, 2023, and I am pre-recording this Trading Places Live for just a little bit later this morning. Currently, let's take a look at futures. Right now, I'm showing the Dow futures down 20, S&P 500 futures down 2, NASDAQ futures down 3, so pretty much flat, just slightly negative. Crude oil prices, though, down $1.65. We're back to $70.50 a barrel. 10-year Treasury yield down 2 basis points, back to 3.67%. So that is where we are as we get ready to get set to kick off this Tuesday. Let's go through today's agenda. We do have a lot packed into the day. Going to start off with we'll start off with the daily market recap, then talking technically. Chart of the day, going to show you an industry group that looks poised for another breakout. This was a group that led us quite a bit back in the early part of 2023. Has been consolidating, but it is literally right on the verge of a breakout, so you'll want to check that out. Earnings spotlight. Actually, I looked at like 9 or 10 earnings this morning from either this morning or last night, and not only did all but one beat estimates. Actually, no, they all beat estimates. And only one is losing ground this morning. So all but one gaining ground, some of them making some pretty big jumps. So we'll go over that in earnings spotlight. And then in a 3 you must see, I took 3 of the group that I'm going to feature in the chart of the day, that industry group. Took 3 of the key stocks in that industry group. We'll look at those charts during the 3 you must see. But let's go ahead and jump in and start off with the daily market recap. So on Monday, we saw the Dow Jones Industrial Average give back about 200 points. S&P 500 down 8, NASDAQ down 11, mid caps down 26, small caps down 24. Clearly, on a relative basis, small caps were the laggard. We saw great action on Friday out of both mid caps and small caps. And yesterday was more of a day of profit taking. We saw mostly weakness, especially in the morning, and we started coming back. And then in the afternoon, that rally kind of fizzled out a little bit and still finished down quite a bit for the day. So definitely a little bit more weakness on the small caps. I'll be interested to see whether or not we regain strength in that area today. Utilities gained about 0.5%. Healthcare up a little bit more than 1/3 of 1%. Discretionary up about 0.3%. To the downside, industrials lost about 0.7%, and energy down 2/3 of 1%. It really was a mixed day yesterday. We did see more defensive stocks performing well. Some of the more aggressive, although industrials are a little bit more value oriented, but there are also some growth in there. Anyway, it was kind of a mixed bag, really, when we look at the sectors. Nothing really standing up to lead the market any higher. But at the same time, the groups that had been leading throughout 2023, discretionary, technology, communication services, held up okay, even though we saw a little bit of profit taking yesterday. So not bad. I can say that we are seeing some relative weakness in areas like technology, which, to be honest, it's probably about time. Had a huge run up on both an absolute and relative basis in 2023. But we have seen a little bit of relative weakness in the technology area over the past couple of weeks. Moving on to the 10-year Treasury yield. Nothing out in terms of economic news today. Nothing of significance. In fact, I looked ahead the rest of the week, and really the only report that's worthwhile or has any significance whatsoever, in my opinion, is initial jobless claims. And that's a standard routine report that comes out every Thursday morning. So that's going to come out this Thursday. Last week, the number was 232,000. We're expecting that to jump up just a little bit to 240,000. Other than that, it's a very, very quiet week of economic reports. It's also a pretty quiet week for earnings reports. We're kind of through now all of the major earnings reports. Obviously, many of the big, large cap Dow kind of names reported back in April. And then we got a lot of the big name technology companies, a lot of the software semiconductors out either at the end of April or maybe early part of May. Gotten through a lot of the retailers, few of them still coming out, but for the most part, a lot of the retailers have reported. So there's just not a lot going on now in terms of earnings. And so we got the Fed coming up next week, next Tuesday and Wednesday. So we're a week away. I think we're going to start hearing a little bit more banter about the Fed and what they might do. It's widely expected that they're going to pause as far as the rate hikes go. Will they give us some additional language? Maybe talking about inflation. I see prices coming down in a lot of areas. So will they discuss that? Will they talk about maybe the fact that the economy is still okay and inflation seems to be, I don't know if I would say it's in check, because they really want to get down to that target 2% level. And we're not down there at this point, but we're heading in that direction. I don't know. That's going to be the real wild card for next week, is what does the Fed say? Do they change their language? Don't know. We're going to find out next week. Moving on to the talking technically segment. S&P 500, 4273. We got up yesterday to 4299. 4305 is your high close from back in August. That would have been on August 16th. 4305. Yesterday's high, 4299. 6 points away. I mean, I'd essentially call it a test. You can call it a double top, if you will. It's still a little early, I think, for that. We don't know. We've been putting in these higher highs, higher lows last 3 days. Will we put in another higher high today? Will we go back up through 4,300? Will we test 4305? Will we get through it on an intraday basis? And if so, do we hold it? I would expect, with this being such a big level, that we're not just going to go powering through it. But I've seen a lot of crazy things when bull markets get going. I wouldn't rule it out. I just wouldn't expect it to be the highest probability. You know, when you're looking at technical analysis, for me, it's about probabilities. It's about managing risk. So I think if you're in the S&P 500, trading the spider, trading one of the leveraged ETFs, up near 4,300, it kind of makes sense to kind of back off, maybe hit the brakes a little bit, maybe sell some of those leveraged ETF, and let's see it confirm. You might say, well, what if it goes through? I don't want to give up that 1% or 2%. Well, this is probably the best 1 or 2% to give up. Let it confirm. Now, if we pull back from here, get a normal pullback, to me, that would be the rising 20-day moving average. That's down at 4181, a little bit more than 2% away. So we got about 0.75% to the upside and maybe 2% to the downside. That's the way I would evaluate risk at this point. Now, we break through 4305 and close there, we got a different ball game. But right now, I think it's key to respect that resistance, but also respect support to the downside. Got a really good market here in 2023. I believe we're going a lot higher. So I would be looking to buy on pullback, but I have no problems taking profits at a key resistance level. NASDAQ 100, there is no resistance level from August. We took that out a few weeks ago. We just continue to power forward. Looking at a little bit less in terms of hollow candles over the last week. We did have one back here the beginning of June. That was really the only day where we've seen a lot of intraday buying in the last 5. Everything else has been mostly, we've been moving up on gaps. Only one day here where we moved a little bit lower on the gap. So overall, good action in the S&P 500. Great action on the NASDAQ. We've seen a little bit of rotation away from the NASDAQ, just a little, last few days. Will it continue? My guess is probably. I think the NASDAQ could use a little bit of a pause. I think some other areas probably could use a little bit of bid. I wouldn't be surprised to see that combination. And June is a decent month for it, even though we are in a period, a 4-month period where growth outperforms value. June is a month where we tend to take a little bit of a step back, especially the second half of June. Today, by the way, ends a short-term bullish historical period from May 26th through June 6th. And you can see May 26th through June 6th has been pretty strong, both on the NASDAQ and if you look over at the S&P 500. So it's kind of played true to form in terms of historical trends. All right, moving on, chart of the day. One thing I want to show you as part of the chart of the day is when we do our 3 times a week Earnings Beats Digest newsletter, we normally feature individual stocks, normally. But occasionally we will feature some industry groups or sectors. And so I wanted to give you a little walk down memory lane over the past, I don't know, maybe 2 months, a little over 2 months, and go through a couple of these charts that I've shown in the past. This was back at the end of March, right in here, when I was talking about internet stocks. This was right in our Earnings Beats Digest. I said, hey, if we get through this 2,500, this is an uptrend with a cup. See that cup right there? 2,500 down to 2,100. What's that measurement? 400 points. You break above 2,500, what's your target? 2,900. We broke above in early April. Yesterday, we not only hit that 2,900 target, we've exceeded it, up a little bit above 2,900. So again, this is an area along with technology that, you know, we could see a little bit of a pullback and let some other areas catch up a little bit. Wouldn't be a horrible thing. Watch that rising 20-day moving average, currently down at 2830. So this was one that I featured back on March 27th. Next up is the XLC. I featured this one on April 10th, right here. Why? Well, I'm going to actually go 2 years out because I want you to see this bottoming head and shoulder pattern. Left shoulder, neckline at 60. Lower low puts in the head. Right side of the neckline at 60. Right shoulder almost perfectly symmetrical with the left shoulder. And then the breakout out of this bottoming pattern. 60, top of the neckline. 45, basically, the bottom of the head. That's 15 points. You break out above 60. The measurement is 75. We're at 63 right now. Communication services looks good. That was one that I talked about on April 10th. We finally got that breakout above the neckline about a month and a half later. And now we're trending higher. XLC looks good. Here's one that I talked about. This was, you know, some folks say, well, you know, when's a good time to get into leveraged ETFs? Well, this was on April 28th that I featured this. And I just want to show you, this was the candle that I circled at that day on April 28th. And you can kind of see this kind of a little bit of a neckline, but certainly an area. I'm going to say probably at about 7,400 down to maybe about 7,200. You can come across and look at all these prior lows that held in this range. Then as we got through, look at the resistance. So we had support over here. Then we had all this resistance held here, double top there, held all of this for 6 weeks. Finally, we break out above that 7,200 to 7,400. And then what do? We come down, we print a hammer right in this major support zone. And this is when I told folks at Earnings Beats, if you're going to buy a leveraged ETF on the semiconductors like the SOXL, this is when you do it. Why? Because if we fail to hold that support level, we get out with almost no damage. Remember, these leveraged ETFs move 2 or 3 times the underlying index. You don't want to get in after it's made a huge move, because if it just has a normal pullback, it could pull back from 9,700 down to 8,500. That would just be a normal 20-day test and support level. That's 1,200 points. That's 13%. What if you get into a triple socks after a huge run up like this? The other day, I was talking about the TNA, how I like the TNA, which was triple the IWM, the Russell 2000. And someone commented and said, why would you go into the TNA? Why wouldn't you do something like the semiconductors? Well, I mean, the semiconductors are stretched. It's risky to invest in any semiconductor, but to do it 3 times, it's incredibly risky. You want to get it at support, or I would have even been okay when you wait and get the breakout above this prior level. I mean, I would have been okay getting in there. You could use the 20-day moving average as support. But you either want to get it as it's making a key breakout or when it's at major support. That's when you want to build your leveraged ETF positions, in my opinion. Now, whatever works for you. If you like to get in these momentum and that works for you, that's fine. Personally, for me, I just have problems managing risk because it would be my luck. The day I get in, that would be the topping candle. And then I'd have to figure out how much pain am I going to take on this trade before I decide to cut loose and let it go. I'm not holding these things long term. They erode. Anyway, so that was the semiconductor. That was on April 28th, right there. Then talked about on May 12th. Let's go back to it, just a 1 year. So then on May 12th, another industry group that was featured was Medical Equipment Group. And so this was on May the 12th, right in about here. So we had gotten a breakout. I'm trying to remember what I was trying to point out on this one. Might have just been this price support area. This one obviously broke back down to the downside, so I probably would have gotten out at that point. Let me look at a 2-year and just see if there was anything else on this chart that I can recall pointing out. Oh, I know what it was. When it was pulling back, I actually showed the trend line and looked at this and said, yeah, because we were right around here. And I said, if we fail to hold these support levels, these moving averages, watch trend line support, and drew this trend line. Check out the DJUSAM Medical Equipment Index. Came right down to that trend line and turned and is up, I don't know, 150 points, 140 points, or no, 2430 to 25, 20, about 90 points, my bad. But right up there to that 20-day moving average, which now we got to get through. But my point is, using technical analysis can enable you to help manage your risk. Just knowing where certain key levels are, whether it's moving averages, trend lines, price support, resistance, whatever it is, gap. If you're going to buy in the middle of a range, you're taking on more risk. If you're going to buy at the bottom of a range or on a major support level, you can take out much less risk in getting in. So with all that in mind, that's going to lead me up to today's chart of the day. And if you like these charts of the day, by the way, go over to earningsbeats.com. Those 4 I just showed you were all part of they were, 3 times a week, but since the end of March, those were 4 indexes, industry groups, or sectors that I featured. All it takes is a name and an email address. Hit that subscribe button. We'll make sure you get set up and you'll start receiving this. Also, all of our free events, we reach out to our Earnings Beats Digest community. Got a big one coming up we haven't announced yet. It's going to be announced probably in the next week or so. We've got a big one coming up. So you want to be part of our community in order to receive these 3 times a week charts. And they're very simple reads. 2 paragraphs in a chart. That's all I send out. Name and email address will do it, though. No credit card required. You don't have to give any of that information, financial information away. And you can unsubscribe at any time. So if you don't like it, it's not really doing anything for you, feel free to unsubscribe. But great way to connect with us at Earnings Beats, learn a little bit more about the things we feel are important, and hopefully help you in your trading. Or while you're over there, check out our no-cost trial, 30 days. You do have to give credit card, but you get our full service, 30 days, $0. Check us all, check everything out that we have for 30 days. I think that's a great deal. All right, so what is today's chart? It's the travel and tourism group. Look at these tops. 1, 2, 3. Technically, we actually closed just slightly above these prior highs from a closing perspective. Volume was moderate, wasn't light, wasn't heavy, just kind of moderate. But this is a group that's now risen 60 points, or about 9% in the last 4 days. And it is on the verge of a major breakout. So I would be watching this area very closely. This was a group that had tremendous strength back in January and February. And while it was consolidating, look at that AD line move to new highs. So it's giving signals that it's being accumulated. It's in a very bullish pattern, and it is right on the cusp of a major breakout. Watch the travel and tourism group. And we'll go over the 3 you must see at the end of the show here in just about 5-10 minutes. I'll be featuring 3 stocks within this industry group. All right, earnings spotlight. Want to go through these fairly quickly. So there were some really nice reactions, nice earnings reports and nice reactions. The best one was GitLab, GTLB. They reported yesterday after the close. You can see the reaction. I'll get you the latest here as we're getting closer and closer. It's now up 30%, up $10.76. So a huge move there. The next best one I saw was THO, reported this morning. THO up $7, almost 9% this morning after reporting earnings. So it's looking to gap up to about $86 above any of the recent action over the past 3 months. So Thor may be resuming a prior uptrend. Lots of different earnings reports, though. Those were 2 of the big highlights. The only one that I saw that was actually down after earnings was SJM. It's down 1%. Every company I looked at beat earnings estimates, and this is the only one that reacted negatively. JM Smucker Company. All right, 3 you must see. Let's wrap up with these 3 travel and tourism stocks. Booking Holdings. So going to start off here with this one because it is, all right, let's go ahead and start with the first one, which is Booking. We sent this one out to our members last week as a nice little trade from that 2,500 area. And actually, it was a little bit above that, I think, before this latest drop. But stock rebounding nicely. I think it's heading for 2,800. Looks good. EXPE. This one's starting to get going. Just made a breakout of its own above this consolidation range. Another one that I think looks really good. And then finally, let's see. We got one more for you. And that is Airbnb. Airbnb, another one coming off the double bottom right here, is broken back out above the moving averages. AD line looks great. I think another one that could do very well, especially if we get that breakout in the index. Anyway, that's it for me. I appreciate everyone tuning in. Have a great rest of your day. And I'll be back tomorrow over at Earnings Beats. Happy trading, everyone.